All right. This week I have been a little under the weather, so I'm recording this at a different time. Um, but you know, this week has been really an incredible thing to watch. Um, there have been a number of indices that have hit new all-time highs. We'll take a look at that a little bit later. Um, we had the Fed chairman come out and say some interesting things, which we'll get into here in a minute. So that's kind of where I want to start this week as opposed to the markets. I'm going to start with the economic calendar. And then I'll kind of go back and forth between uh, the market indices and the markets themselves. And then I'm going to end with a little update on targets that David Hunter had put out for his forecast. And I think it's, especially since we're hitting all time highs, where does this thing go, or where could it potentially go? And potentially is probably the operative word. So let's start with this week. And I'm going to skip around a little bit because a lot of the activity really happened in the middle of the week, and I want to end with that. But core inflation came out a little bit, pretty much in line. There was nothing on Tuesday this week that came out that really surprised anybody. And then Wednesday, we saw mortgage rates go down. We had the PPI, come in a little bit lighter, which kind of buoyed the markets a bit, both on the core and the month-over-month regular PPI, which is the producer price index. I'll end with the whole Fed thing. And then Thursday, we had retail sales came in stronger than expected. We also had initial jobless claims come in lighter. And then we had the New York Manufacturing Index come in much worse than, it's back to where it was a few months ago. And then the S&P Global Composite PMI, which is combination manufacturing and services. Manufacturing went down, services went up. It was a net gain of 0.3%, but manufacturing is really where it's at, folks. This is what brings wealth. Services just passes money around, within an economy. So talking about the FOMC and their rate decision, they did not move the rates, which surprised nobody. It was like 96% of the people I think out there were expecting that they wouldn't do anything, as they had indicated they wouldn't. But the press conference is really what got things rolling on Wednesday. Between the rate cut decision and the Fed conference, Powell came out, Fed Chairman Powell came out, was pretty dovish on things. Now, there were other speeches later, or one speech later, that was a little bit more hawkish, but he was basically talking about, cutting the Fed funds rate. And that really got the market going. Just to show you, at 2 o'clock, this is a 1 minute chart. So, at 2 o'clock, he announced that there would be no, or that it was, along with the minutes, came out, looked very dovish. Look at this rise. And then at 2:30, around, let me move this so you can see the times. So this is 2. And then around 2:30, he started to speak. And as he spoke, pretty much was pretty dovish about, raising rates in the future and those types of things. The market exploded up and did pretty much treaded water then the rest of the time, which is fine. After that type of explosion, but you could see, you went up quite a few points, from 46.46 on the SPX up to 47.09. That's a pretty good run. You normally don't see that big of a move in the SPX. So, his talking had a huge effect on the markets. on Wednesday, and kind of led us to these highs that we're seeing now. If going back to the calendar, we had one thing I do want to make mention of, and probably go back here, is the 10-year yield has dropped also on Wednesday when he came out. When Fed Chairman Powell came out, you can see this precipitous drop on Wednesday. These are daily data now, down below 4%, and now we're hovering. We get down below 3.8%, and now we're moving in the direction, as the more this goes down, the more the markets are inclined to go up. And we also look at the dollar dropped also during that time. Made a little bit of a recovery on Friday, but for the most part, pretty, as we had gotten kind of over this downtrend line, thinking it might break and might get us back up to 104, 105, 106, maybe 107. Chairman Powell saying this really changed the trajectory of the dollar. So obviously that will have an impact on mortgage rates when we look next week, as long as nothing drastic changes. Then this coming week, we still got a lot of activity going on, especially around building and housing. Got building permits. On Tuesday, housing starts. On Wednesday, we'll probably see the mortgage rate go down, possibly less than 7%. Then we might have the CB consumer confidence will come out, existing home sales, the GDP growth rate, initial jobless claims, Philly manufacturing index, and then Friday, another big one. Well, a couple of them actually, 3 if you include personal income, but core PCE will be reported this coming Friday, as well as durable goods. And then we get the Michigan consumer sentiment, final report, new home sales. So the markets will move, definitely. There's a lot of things being reported here that are going to be market movers, and if they're anywhere out of line with what the expectations are, high or low. Right now, it's got a lot of wind. The markets have a lot of wind at its back. The momentum is squarely behind those. So getting to David Hunter's forecast, we're reaching all-time highs. So let's just start here with the Dow. We're starting to reach all-time highs. Now, David Hunter, his predictions are, I'll put them in here. Let me see if I can crush this down a little bit, make this wider. So I'll put the targets for David Hunter's forecast, because once you hit all-time highs, where do you go? Where's the support? Where's the resistance? Those types of things. So we've gone past the all-time highs for the Dow Jones, and David Hunter's forecast for the Dow Jones, and these are not trading calls. These are predictions. These are forecasts of what his expectation is from his analysis, 48,000 up here. So we're still eons away from 48,000 if it gets that high. Now, he's also thinking that his calls may be even a little bit underestimated, which would be interesting. Last time I saw anything like this, and I certainly don't have the knowledge I have today, but it was back in 1999-2000 time frame, where the markets went up precipitously, similar to this. And you go back and look at those time frames. I may do that next week too. The SPX, which we talked about already, we're getting close to the all-time highs. The target this is the S&P. For the S&P is 6,000 to 7,000. So that would put us way up here, and I probably haven't even marked it because I didn't think we'd ever get there, to be honest with you. But we're close to the all-time high here. 48,1862. But if you get to 6,000 to 7,000, obviously, that's just, I mean, that would be insane for it to happen. And we have the NASDAQ Composite Index, and it's at 14,813. We haven't quite reached the all-time high, but the target for this is 20,000 to 22,000. So, David Hunter does not believe that this thing is almost done. And what's the next one? We'll go to the RET, which is basically the Russell 2000, the small caps. All-time high, 24,5885. And his target for that is 3,000. And it's definitely been the laggard of all the indices. Now, it started to break through. If it breaks through here, let's say 2025, this thing can run from there. Let's see, who else do we have on here? We have I didn't put it in here, but let's just get it out. SMH, which is the semiconductors, is predicted to be 300. That was a change after we had some stock splits back here in April. There was a 2-to-1 split, so they may look a little bit different to you if you've watched previous episodes. So 300's up here, so we still got a 50% upside if David Hunter's predictions come true. And then the Qs be another one, and I did not put it up here either, but I should have. And that's what happens when you get sick. It's at a new all-time high this past week as far as the close goes. And so yeah, it's predicted to get to 600. So that's, again, this is almost 50% from where we are right now, where we sit today. And his expectation, David Hunter's expectation, is a lot of these will happen in the first half of this year. But his predictions on timing have never been very good, especially for this call. Some of the other ones that he's had were usually, I'm going to say, are 1 to 2 months off. But he usually gets the direction right. So I have some faith in his forecasting. Now, this is a bigger call than some of the things he's made in the past. Other things and I talked about gold and silver last week. We'll start with the GDX, which is the major large miners, gold miners. And, we're sitting at, 30, almost 31. Prediction is 65, so more than double from where we sit right now. And David Hunter has basically said that this would not happen until after the kind of the equity markets had peaked, that these would hit their all-time highs. That they would continue to go up, but these are huge moves. GDXJ, which is junior miners, stand at 37.55. His prediction is 100. So we'll see how that plays. I mean, that would be unbelievable. Then the silver majors, the major miners, I like to say that, are predicted to be at 35. Do I have that right? Oh, I'm sorry, 75. 75 is the number for SIL, and the juniors that sit at just under 10. His forecast is to hit 35. So looking at this, copper stands at 388. His prediction is a $6 number on that, so it has a little room to move up also over 50% current price. And gold, I've been doing some work while I've been sick, is going to be 3,000. So we sit at 2019 right now. 3,000 would definitely do a lot, make all of these miners move, the GDX, GDXJ, and then you can get into the individual underlines like, Barrick Gold and some of the ones I talked about last week. Then let's see, silver sits at 23.86, and the prediction here is that it will go to 60 at its height. And again, I'm going to tell you, just from reading his stuff, he thinks that these targets are conservative. So, there are a number of things that drive the markets, and one of them, most of all, as you might guess, is going to be emotion. The FOMO setting in with people, similar to what happened in the dot-com bust, back in 2000. Things ran up and they just kept going, and people were afraid that they might miss out. But it's got a ways to run if his predictions, his forecast comes true. So, do with this information what you want. But with them hitting all-time highs, I thought it was important to kind of share them again, because, there's nothing to compare it to. You don't have any support, well, you have support areas, but you don't have any resistance areas, because when you're in all-time highs, there's nothing you're resisting. So this would give you some sense of, from a standpoint, what could happen from here. I'm not saying it will, and again, I'm going to say it again and again. And at the beginning of my episodes, talk in terms of I'm not making trading calls. I'm just giving you information that I've picked up for someone I've followed for a while, and he has some credibility. Some people would argue that, but I've looked into it enough to believe he is the real deal from my standpoint. Do your own research. So that's really it for this week that I wanted to cover, but just kind of give people a sense of where things might go. We got a lot of information, economic data coming out this week that will move the markets. It may move it down. We've gone on a pretty strong run over the past couple months, and taking a breather would not surprise me at this point. How low could it go? I mean, the converse of this, if we still take the Peter Schiff route, then we would wind up, going into the bust from where we are right now. And many are calling for that, by the way. I don't want, David Hunter's an outlier. He's not mainstream. That's one reason he calls himself a contrarian. But he has 50 years, looking at this stuff. And I've not looked at it that closely over the years, although I've invested for probably 30 years. Excuse me. All right. So I'm going to end this before I completely fall apart. But give you something to digest and think about, and, look at what you're doing. Remember, there is always a better way.